Hello, everybody. I don't think I've ever seen a market where there are so many good things and so many bad things at the same time. And I know historically, there's never been a bull market where you've had technology and the Qs, software, um, big cap, the Magnificent Seven looking so terrible, and other things looking so good. So markets change over time. I'm sure we can attribute this primarily to artificial intelligence and the evolution of it. And of course, what I've called the Trump effect. Let's just see where things are at and start at the top left, as we always do. Short-term interest rates have stabilized and actually inched up a little bit, which tells us there isn't going to be any um, Fed interest rate cuts coming anytime soon. I saw a funny post. People always making jokes on social media with Jerome Powell giving the big finger, assumedly to Trump. And I saw that and I was like, well, that's aligned with this chart. As short-term interest rates are inching up there's not going to be any interest rate cut, which he wants. So we'll see how that evolves with his new Fed chair, if he gets approved, which everybody believes he will. And there's been so many whipsaws lately, and it is what it is. But this just communicates the uncertainty that's going on and how things can change from one day to the next or one week to the next. And so we have a representation of that with these interest rates, the 10-year, which flipped up so strongly. And that hasn't been negated, breaking out of this consolidation. But when the markets were selling off, as they were toward the end of the week, and it doesn't look such like a big deal, but it is a big bar. As prices, actually, this one is what I'm looking at. They turned down so violently because money was going into bonds. And so it was money rotated out of the markets where it was collapsing at the time. Money rotated into bonds, which push interest rates down. So that's changed this chart into one where it questions the potential for this to being a breakout failure. What we're primarily interested in is whether interest rates now stay in this upper range, or do they actually break down below here or flip back up again. So there's nothing definitive here other than to know that this breakout is now started to produce a trading range. The yield spread between these two has increased dramatically. It could be good. The way things have been lately, normally we would say, yeah, spread there is good for financial institutions, banks especially. But banks have broken down. Why? Trump effect. Trump comes out and says, well, certain banks related to credit cards and financial institutions that when he wants to limit what they can charge on credit cards to 10%, where a lot of them are getting 18, 20, 21%. That's cutting profits in half. So a lot of the financials have broken down. Another example of what we normally would look at as, hey, that's a positive and it's good for financials, it hasn't been. And the 30-year broke out, similar to the 10, different levels, but came back down hard, went up, flipped back down again. And as we look at the two major indices here, the Qs and the spiders, the NASDAQ 100 has broken down under several levels of major support. And while it flipped up on Friday, breakdowns like this historically result in a continued move to the downside. And of course, like with any chart, the right side is the unknown, the future. All we can do is look at what is, and what we see is a breakdown, but pretty big wide range bar, reversal to the upside into minor resistance. And at the beginning of this week, the focus will be whether this continues to move up or whether it just rattles around here. So if we were to get an inside bar on Monday, now I'll call it a 1, 2, 3 because it's a 1, a 2, and then we would see up. But 1, 2, 3 patterns are ones in which it's aligned with a void. And you might say, well, great, that's a void. It came down as hard as it did. That created a void. I would say, yes, absolutely. But the attributes of a trend, one of them being angle of retracement, tells us that the power to the downside should be respected. And historically, it often results in a move lower. So when we look at angles of retracement, and we can go here and see it's not as steep as this one, but this came down hard and it wound up moving lower before it flipped up again. And this one, it was a little more controlled, but it was a wide range bar and it went up. That broke down and immediately flipped back up again. Now this was 3 bars down and it flipped up. So if it goes sideways a little bit, ideally for 2 more days and breaks above those highs, that would give us a short-term bullish bias that it could go up since it's stabilized, not just one day. An obvious occurrence that would suggest lower would be if it flips right back down again on Monday and we got a red bar, and that would tell us that it's likely to be a measured move lower. So we're waiting to see what happens here. Technology, we'll take a look at software and some others that have been killed. And the S&P 500 had that big up day, and we've been talking about this 6,900 last week. And I wrote about if it broke below here, it was likely to come down to 6,800 because this was major support. There was little to no support below that 6,900. Bitcoin was dropping, others were dropping, and that certainly helped bring things down. And then it began to hold that major support level. And then because Bitcoin reversed big time overnight, so it was a relief, and everything rallied back up again. But it didn't get back up to the highs. It's in the middle of the trading range. It closed above 6,900, but it's been flip-flopping back and forth above and below 6,900 to varying degrees. Big time back up again, touch 7,000, break down, and then overall it just keeps getting pulled back to that level. So this week, what we'll be looking for, do we get a 1, 2, 3, even though it's broken down? Usually wide range bars like this are followed by an inside bar, a consolidation or resting day, and then the attempt to go higher. Our internals are neutral still. Sentiment had gotten to an extreme, but breadth didn't. Over here it was slightly extreme up here. Normally what we see is a push up like this, and breadth goes up toward the upper line, and then we get this correction. But what we see now is sentiment has been working off that extreme. The total put-call ratio never got to an extreme. We look at these together, and now they're inching down toward a bullish level. Breadth is just neutral, around zero. Even though there are indices making new all-time highs, there are others breaking down through major support levels. Big difference in as we look at different markets, and why I said there are many things that we would look at as being quite negatives and others that are so positive, and that kind of crazy. Historically, it doesn't work that way. All right, so breadth at the end of the day was respectable on Friday, closing above 1,500, almost 1,600. That's a positive. Straight up move. This is a line chart of SPX, S&P 500. You see it went up here, went all the way back down there. Now it's back up again, and a lot of whips. Volatility index spiked up, and let me just scroll that over. Usually when it bottoms out like this and it spikes back up, it goes up to the next level where we look for market bottoms. Not this market. This one is different. It's got a different personality, if you will. Let's call it the Trump effect, AI. Those are the major influences. But historically, the things that are happening don't historically happen. It's happening now. All right. The dollar. The dollar had a little mini, I guess you could say more than a mini collapse. There's a lot of talk about the yen carry trade, and it spiked lower and then began to stabilize. At the same time, gold was screaming higher, and then that topped out and pulled back real hard. now that the dollar has rallied up into this minor resistance area, it flipped down on Friday. If this continues to move down, it supports a bias that gold could start to move up. Excuse me. Now, back to the angle of retracement concept. That came down vertically. Most times, patterns like this do not go right back up to the highs, especially off of a V bottom, meaning it just goes down and goes right back up again. But this one gapped up. Now, this is the ETF. It's not gold futures, so it's got the gap. But it's rattling around here, which is creating an overhead resistance area that it can, if it overcomes. So getting above here and the dollar moving down would be supportive of gold going up. So as a short-term trader, maybe even put spreads on gold stocks that came down relatively hard, those could present opportunities if this actually follows through. Dollar lower, gold up. Oil, of course, has been interesting with the takeover of Venezuela, Trump, where it was going sideways for a few months there. It looked like it potentially could break down to the next level. And then it turns up, and so far what we see here is it's just consolidating its gain, which would imply it could go higher. Now, you can see it gapped down, it gapped up, and it gapped down. That's called a bear island reversal. Well, granted, but it's not going down. It's continuing to go sideways. Now, it might go down, but at the moment, coming down to a support area is telling us that there's enough buyers' demand to hold it there. And if I was to put this on a candlestick chart, you'd see a topping tail and it continued to trade inside. That communicates that buyers continue to step up. So what to watch for? Does oil break below this pivot low, or does it start to move back up again? Now, I'm going to take a look at airlines or jets, which crazy move. There were crazy moves on Friday. But if this starts pushing up, oil obviously is a major cost for airlines. And for the moment, even though oil is up, nobody cares, right? That the cost is going up. And airlines went up. Transportation stocks went up. I mean, it was sort of Friday a fear of missing out, irrational exuberance, if you remember that comment from the Greenspan comments there. We talked about the markets. And, yeah, if oil keeps going up, there may be a pretty sharp profit taking in those airline stocks. All right, so let's look at some of the indices. And you might remember this moved to a sideways trend when it broke down under major support. Then we moved it back to an uptrend when it made a new high. Then we moved it back down to a sideways trend. And so now we have a trading range. And as I look at this and Friday's bar, can it break out to new all-time highs and join some of the others? Or might this possibly, right? There's the unknown. We look at patterns, and I'm trying to draw here. I'm not doing a good job. Could that be Head and Shoulders top beginning to form? We'll see. We have to respect wide range bars because they're power bars. They also create voids. That's why we look for the 1, 2, 3 pattern, because this creating a void, then the inside bar, it rests and builds a little support that would tell us that sellers did not take control, drive it back down, like right here. As an example, what I'm talking about. This isn't a wide range bar coming off of a bottom like this is, but you've got a wide range bar near the top of resistance, and then it flipped right back down again into what we know would be an intraday void. So a consolidation day here would build an intraday base and might move it back up again. So like anything, we look at a pattern, we define what the trend is, we look bar by bar analysis, and then we see what evolves until it reaches a point where we can clearly say that it has created a pattern that is predictable. So let's continue with what's predictable patterns and what's not. So as I look at the industrials, it made new all-time highs. Over here where it was consolidating sideways into the rising 20, that suggested if it could take it out, it would go higher. And it did. Now it's a wide range bar. So let's continue. Technology. And here's one of the bad things that's going on. Industrials look great, positive. What does it communicate? Buy pullbacks, potentially look for continuation patterns, a wide range bar possibly ending. It's a little far from the moving averages, so we'll have to see how this evolves. New patterns. This breakdown through all of these major support areas suggest sell the rally into minor resistance. But so now it's created a void on the way down. How far up does it get? The longer it spends time down here, the greater the communication of it going lower. Right? All right, communications, more of that whipsaw action. Break out, break down, break out, pull back. It's below the moving averages. It needs to tighten up. Energy, of course, following the movement in oil. Look at the moving averages far apart. Buyers continue to step up, and it looks like it's new all-time highs. Now, looking at financials. Financials tend to be the backbone of a bull market and moving the S&P 500, and that's broken down under two areas of major support. But we've got a rounding bottom. Right? After a breakdown, the sharp move down created a little bit of a void. Now, this could it could be because of Friday's strength that the red bar didn't follow through, but it gapped up to the top and it closed near the high. This kind of a pattern is supportive of credit spreads. And the weekly options trader would be looking for credit spreads in stocks with patterns like this on a short-term basis if they wouldn't break down. Now, we don't like directional patterns on stocks that are broken down under major support, but this is certainly something that could move higher because it spent so much time bottoming out here just above the 200. And if this does, it's supportive of a bias that the S&P 500 could make new all-time highs if financials join the new high party. Now, materials. Right? This is part of what's changed this year with materials, which have historically been very erratic. You can see these price actions over the years where it's breaking out, down, rally up, break down, and this is kind of a pattern of a bull market advance and no sign of stalling here. A bad sign last week, consumer discretionary broke down under major support. And this was after making new highs, deep retracement, lower high, and here you have this head and shoulders top. I'm trying to draw it there. Head and shoulders top and a violation of the neckline or major support. So we have financials questionable, consumer discretionary breaking down, technology breaking down, S&P 500 neutral, and a lot of money moving into defensive. Down here, no one wanted defensive. It was kind of a bear market chopping around, and all of a sudden, money just rotated in there. You could say rotation into value. We've seen that before and it failed, but not this time. So strong move up. Healthcare has just been a big mess. This particular sector, like all of the S&P sector ETFs, are more diversified. Now, if we go down and look at medical devices, which were looking good and broke out, they broke down severely, and others broke down. Now, real estate, REITs, which had broken down, another example of whipsaws, broke down and came all the way back. And here we've got a sloppy little rounding bottom buy setup there. But a lot of overlapping bars. It's not tight. It's not clean. Nonetheless, it moved up strongly on Friday. And utilities, which have been bottoming out here. You can see the breakdown, the move up, chopping around. I suspect this is going to break out. It should, but we know when we know it actually breaks out. So quick look at the weekly time frames. Spiders have been doing nothing for months, just whipping back and forth. Industrials new highs, breakout of a several week consolidation. Technology, topping tail, bottoming tail bar in the middle of the range. This one in the middle of the range, whipping back and forth. And we've got energy moving up. Financials, a mess. And here we've got materials, new all-time highs. Discretionary broke down on the daily. The weekly is still in an uptrend. Staples, that looks like a wide range bar ending. And we've got real estate whipping back and forth. And while this certainly looks like it's going to go up, we got a bottoming tail bar and that messy daily time frame that says it should go up, a bias that it could break out above those highs, even though there's all those pivots up there. And utilities on major support, and it's been bottoming out there. If you can take out those highs, it should continue to go up. All right. Spent a lot of time on those and patterns. Let's take a quick look over here. We looked at all of these charts. Let's look a few others. Magnificent 7. Topping pattern. Closed down below this support there. And we can take a look at them. Here they are. Apple came roaring back after a breakdown. There's Google on its earnings. That broke down. That was the best looking one. Meta on its earnings gapped up to resistance and it's pulled back to where buyers are starting to step in. So we'll see if that turns up this week. Amazon gapped down on its earnings. They're spending so much money on this. Investors are wondering, when will they be able to make a profit? Is it smart that they're spending all this money? Time will tell. Tesla reported earnings. You see it's been lower here. It's on major support in the rising 200. Netflix still dealing with buying that other company, staying away. We looked at Magnificent 7. NVIDIA, the talk of AI bubble. Now, was this saved by Friday's big up day? We'll see. What we want to see now with NVIDIA as a bellwether for semiconductors and AI, can it get back up to the top of this range and then break out above it? Or does it go right back down again? You want to keep an eye on that. And here you have Microsoft that looks like it's going to go significantly lower. Right? So that's not looking good. So a few other sectors before we close this up. I already kind of long there. Let's go here. We already looked at these. Just checking here. We looked at those. Some others here. Qs we looked at. There's the SMHs. There was a leader, it broke down. Internet has broken down. Got a void below. So another quite negative. There's your software sector. ETF broken down. Stabilized on Friday. Aerospace and defense. There's two sectors. There's this one and another one. Well, here. No, that's not. It looks just like this. I'll show you. But Russell flipped up. Aerospace and defense at least is pulled back. It's a little whippy, but pulled back to where buyers have showed up. Home builders, I think, got saved by those interest rates going down, but that pulled back. And construction, copper, that pulled in real hard with gold and silver. Biotech broke down last week. I'll keep that in mind if you're in it. Looks great. Regional banks and the transports made new all-time highs. And, of course, Bitcoin, there was the collapse and getting closer to a major support. Bitcoin itself got down near 60,000 and bounced. Retailing, messy. Here's the medical devices I mentioned. It broke out and down again. There's the healthcare, another biotech index. Equal weighted Qs broke down. Gold and the healthcare providers. We looked at the mags. And I think that's about it. We're almost 25 minutes into this video. And, here it is. The consumer aerospace and defense. That looks similar to the Russell 2000. Pullback, down bar, inside bar, deep retracement back up again. Buyers stepped in. So as we go into this week, as I look at these bullish bars on Friday, was it just a big fear of missing out? Is it going to follow through? The patterns like aerospace and defense support a move higher, retail higher but near resistance, and Russell 2000 pattern like that support moving higher. We'll see if they follow through. Stops below last week's low, kind of far away. It is what it is. As always, if you have questions, email us, Greg and Dan at Master Trader.